I know many of us have been struggling to grow our accounts, already looking for money to build our portfolio in our businesses. Now, how to grow small accounts on trading synthetic volatility. Maybe $10 is what you have, maybe $20, $30, $40, $50. I'm just going to put you through. So everyone pay rapt attention. You need this. You can use Formula One. Formula One is called price action, liquidity concept, MACD, and MA. Then Formula 2 is called MACD, of course, and MA. So the combination of MA now is what matters, because MA can be MA, then MACD, alligator, and MA. Now, I have different strategies, but these are more simpler that you can easily understand. And then the trading time, all right, the trading time, execution time is 1 minute time frame. Or you can use 1 minute, 2 minutes, 3 minutes. Then by extension, 15 minutes. So especially the price action and liquidity concept. Even all is important, but the one that's more important is the Formula One. So let's look at the Formula One very quickly. For my community, people pay attention so that we can go together. Okay, so let's quickly look at it. How do I grow my account? Okay, so I'm going to show you now. Let's go. Let me first take from Well Trade. Oh no, there is synthetic. Now this is there is synthetic. So it doesn't matter which instrument and all of that, but I will advise you have pairs of instrument you regularly trade. Okay. Now this volatility 25. This is VIS25. I have formula for boom and crash. I trade more of boom 1000. So it's not the same strategy. All right. So now this is boom. This is volatility 25. 25. So what we're going to do is very simple. Now we want to trade. The first step of doing this, of course, you may want to identify the trend. Maybe will help you because of maybe when the market is going out of, and you know it's a scalping style, you are going to be scalping. So there may be a need for you to know if the trend is an uptrend or a downtrend. So if you look at this now, this should be an uptrend if I'm not careful. Sorry. So we have a high here, a low here. This is no longer valid because this one, something, yeah. So we have a low here, we have a high, then we have a high, and then we have another low. So this low is not up to this. So if you look at this market now, you have this as a low. This is daily, right, as a low, and then you have this as a high. So sometimes understanding this will help you so much. So for now, is still an uptrend, okay? This is still an uptrend. So you just want to identify, are we still in an uptrend or a downtrend? So this is still an uptrend because this is a low. But we need the next one to break this high. So that's where the issue is. The moment we break this, that we're now preparing to go down. Okay, so now what do I do next? Very simple. So you are going to be trading. The first concept or strategy is price action, liquidity concept, MACD, and moving average. Okay, so now we have different segments. Okay, so this MACD, price action, and all of that is different from the MA we're using in the second segment and all of that. So let's go. I've seen this, that the market is uptrend and all of that. So very simple. So the market perpetually, but it's still now kind of ranging now. Okay. So where do I need to go to? Straight away, you just need to go to 15-minute time frame. All right. So let's go to 15-minute time frame. Go to 15-minute time frame. This is the strategy. So go to 15-minute time frame. So what am I looking for in 15-minute time frame? Very simple. What you are looking for in 15-minute time frame is, you can see that this market is ranging. You see that? And this scalping the range market can be very, very cumbersome. So this is a range market. So ordinarily now, if not, what you're supposed to be looking for is a liquidity area for 15 minutes, buy side and sell side liquidity. That is, let's say you call it demand and supply zone, whatever. So let's take this to be, so you definitely want to put it as a range. Okay, let's look at it this way. So you want to, okay. So let's look at this. This is the highest, so let's just take that. So follow me. For your trading price action. And this is very not too powerful, right? Because it's now a range market. So it may not give you what you are looking for, but let's just go. Let's take this. So let's just take it this way. Okay. So if not, ordinarily what you should be looking for is just like a swing low and swing high. All right. The market, because you want to trade. It doesn't really stop you just to have an idea. I do something more detailed. I do my key levels in any of this style of trade. I do my key level so that I can. If you look at it now, ordinarily with this, you know that this market is going up. I can buy up, up to this resistance point. All right, that's another one. So now what we're going to is 1 minute time frame. So we'll step down to 1 minute. So you can do 3 minutes, you can do 2 minutes. All right. So I just straight away step down to 1 minute. Now this market is ranging. It's going to make it cumbersome for what I want to give to you. So you can see the problem here now. This is ranging. It's not going to give you what you're supposed to get. Okay. But ordinarily, if you know, even with the style I have said now, just like this price action and liquidity concept, you know definitely that the market is going up. And so when it bounces back here, you will have been buying up. And these are other things that you just got straight away here. Now, you want to add two indicators. First one is MACD, MACD. Second is EMA. And the one you're going to set to it is just 50 moving average. Okay? So let's go 50 moving average, 50 EMA. So you go to and type 50. I don't do any other setting there. So 50, that's all. Right? That's all. That's all what you need to do. Now, this MACD actually change it to my own style to make it look like the style on MT5. So change this one to column. Anyone you prefer, no problem, but I change it to this. All right, so I made the color just like more likely. Okay. So I remove all of this. Very simple. Now, this is all you need. Okay. This is all you need in this. Now, you can see that this market is not, you understand? This market is not, is sideways, right? Just like I told you, immediately you come, you're able to see that it was sideways. Okay, that's not an issue. Since this market was sideways, you already know that your strategy was price action, right? And then liquidity concept. So all of this momentum were just added. So by that, as soon as the market come back here, get rejected, you want to be finding an entry because this is a 1 minute time frame. Now, so that means with your price action, one of the first thing you're looking at is the candle. So that means where you have marked, now look at your MACD. The MACD first pumped up, try to buy up here, here, and then at a point it got rejected. So your MACD too have already marked. So without the MACD come down to this point, what you're seeing is this. You're seeing a pin bar or whatever candlestick you are seeing. So it's a reversal pattern, and this is an engulfing candle followed by another massive move candle. So probably after this is not your entry. Your entry is after this engulfing candle. So that's to say you are scalping and then long after this candle close. Then your stop loss is below this range. All right. Now your risk reward ratio is 1:2 risk reward. Now listen, while you are following the trade, this is the rule. When you enter a trade, the moment the market has crosses 1:1, you can, number one, either you book part of that, take partial profit. Number two, you can adjust stop loss. But this is the thing. Sometimes when you adjust stop loss, they stop you out. Booking a profit first is important. That means you have reduced your risk halfway. Then you now continue. I get it? So this is very, very simple. Now, one of the things, why this 50 moving average? The moment the market crosses 50 moving average, if you want to be stacking, it's very simple. Now, this was aggressive. Now, I know you probably will be fidgeting, but this is 1:2. Now, why 50 moving average help you again is that you are scalping. When the market move and return to 50 moving average, it got to bounce. While it's bouncing, you are entering another position. A pullback to, now, especially those that pull back to the 50 moving average. This is scalping, moves to the 50 moving average, you are taking another entry. So you are able to stack more position, and at the end of the day, you pushed your stop loss, and break even. Okay. Now, what is my ultimate place I may want to stop or find way to exit? Over here. Well, look at it. The market has refused after 1, 2, 3 touch, right? After this several touch, the market has refused to actually go up after since all this while. But I think this time around is actually going there. Okay. So look at all of this. This is not an entry. This is not an entry, right? Now, this is not an entry. So perhaps, as it's a sideways move, right? You can be stopped. So you can hit stop loss. Just understand that. But you agree with me that all this while, if you enter the market here, you have not exit, market have not hit your stop loss. Do you understand? Because it's ranging. Market return back here. At that point, you already have made some profit. And then, of course, that hit your take profit. Then you enter here, you must have hit your take profit here. This is the point where it gets you boring because the market never got to your take profit, perhaps, and return back again. You probably will be fidgeting. Then the market has given you a profit. Now, because this market is ranging, is why the explanation about the liquidity has actually happened. Now, let me show you. Now, let's take another instrument. Let's take 75. V75, not with X. Okay. So this is V75. Remember your first rule, you will probably want to go on a higher time frame, maybe 1 hour or 4 hours to see where is the trend and all of that. It's important sometimes so that you can give yourself caution. So let's go to 4 hours, for instance, and see the trend of this market. Obviously, this is a downtrend, obviously, right? This is a downtrend. Okay, no problem. If this is a downtrend, so what are we going to do? We go to 15 minutes. And something simple you want to look for in 15 minutes, right? Now, the market is about to reverse, right? So in 15 minutes, what you are looking for, probably to see where you are trading. So in 15 minutes, this was a low, this was a high, and a new low. Okay, if that's the case, then where we have our buy side or sell side liquidity, at least here we have several touch. So let's keep it there, okay? And then you can extend it out. All right. Now we come back to this one. So this is purely price action, and you are aiding it with the moving averages and all of that to find the trend. So here become your right sell side liquidity, as it were. Okay, so now let's go for this market. So let's go for this market. So we're going to 1 minute. We'll go to 1 minute. All right, so 1 minute. Very simple. Now, in your 1 minute, what we're looking for is simple. Where the market, okay? So what you're looking for is very simple, right? Now, your 1 minute, ordinarily, maybe while you are in that point, so this market seems to be reversing, right? Yeah, because this is the last point. Yeah, so this were, buy side liquidity. Now, there were no, so let's go back there. Okay, so we'll start all over. Makes sense. All right, so let's go. So V75, 75, good. We've said we have identified On 4 hours, I hope I'm on 75. On 4 hours, even daily, it's a downtrend. So I don't need to draw any trend line. It's a downtrend. So straight away, I'm going to go to 15 minutes, right? So on 15 minutes, very simple, okay? On 15 minutes, I told you what am I looking for on 15 minutes. So on 15 minutes, this was the previous low and previous high, the new low. So that is immediate swing high we have here is what I'm marking out. Very simple. Yeah, if you need more understanding, if you're in our community, you can always ask me a question. Okay, trading is simple if you can simplify your method. Okay, so let's go. Now, can I use this one for forex? Somebody may ask me. Yes, why not? You can, but you have to be more professional when you're using for forex because forex have external factors that can push price somewhere else. And so you have to be vigilant to know what you are doing per time if you're using it for forex. So we come back here. This is right. So you have just created a trading range, a trade range, right? So now imagine probably when the market was here, okay? So now when I box this, there are chances that you box here that time too. When the market was here, there are chances you box here. So if you box that point, it's another point where the market, that doesn't mean you will not be able to trade. Just to have an idea when your trade continue, you want to identify what you're doing. Now, and I said few indicators you're adding are MACD, MACD, and I say on the MACD is changed to on the MACD is changed to I remove the histogram. Okay, so MACD, and I change this one to column, and I actually pick my favorite color. So you can pick your own favorite color, whatever color you want. So this one is a way. So you add moving average. The moving average you're adding EMA is 50 moving average. Okay, so 50 moving average. So you go to settings of the moving average. All right, so remove all this label if you want. Then just type 50 and okay, you're done. Okay, this shows that this is a downtrend, okay, on 50 moving average. So your MACD2 still shows that it's a downtrend, okay? So here we go. Now, where are we going to now? So we're going to 1 minute, okay? So let's go to 1 minute. Go to 1 minute. Here we go on 1 minute. So remember what I said. So ordinarily, so if I'm following this trade, I actually was supposed to be in this trade, but I was busy doing something. Now, there's something I wanted to show us about this concept here. Now, you see, when the market got there, of course, where you mark to be the bottom. Yeah, so this is the low and high before this low was created. You understand that? And so that's why it's price actions, liquidity, and all of that. If I mark this point here, which was the high, right? Before this low was created, there's a low here. So this was created this low here. Now, if you check on 1 minute more proper, you probably could see another, because there are several candles here now. This is a high. So that means you're going to find this. So that means this is the more recent. You understand? This one here, somewhere like that. Oh, no. Sorry. That engulfing candle. Good. Now you have a low here. So 1, 2, 3 candle. Yes. So it makes sense. It's a sweep of liquidity. All right. So that's the kind of liquidity concept I'm talking about now. So this is a sweep of liquidity. You know, the other time we just came here, I didn't explain anything about because the market was ranging. Obviously, when the market bounces there again, you are entering. So this is a liquidity concept. Now, there's a sweep of liquidity, okay? Now, if these plots have been broken, then we tend to say structure broken, and you want to find probably a rebalance to sell. Now, this is a sweep of liquidity, and then this is market structure shift. Now, the market have traveled, you're waiting for it to return back. In fact, this one become your POI. Now, you're waiting for the market to return, but perhaps there are things you want the market to return to take. All right, so you have another block here, okay? So you have another block. So let's say all of this area, other block. Now, but most cases, what you're looking for is that there should be an imbalance, okay? You will know concept of imbalance, that is fair value gap, an imbalance that the market will return back to fill. And so at the return back of this market is your entry. And then I have what we call 1 to 3 trading pattern, however. Now, if you look at it, this is a low, right? And this is a high. A new low is created, making this low to be strengthened. So that means my entry is after this low. Risky, very risky. Why? This high had been broken. This high is supposed to be broken, which is called break of structure, then is strengthened so much. But, you know, you're a scalper, so you can lose some trades. So understand that. Fear of not losing, put it off from your mind, okay? So here, the market returned back to this point, and that you are finding an entry. Good. Now, this candle, candle, and then we have a bounce. You're waiting. Then the next candle actually continue. Yeah, so that means after this close of this candle is your entry. So when you are entering from here, okay, here, then your stop loss is going to be here, below this. And then you are doing 1:2 risk reward. You may perhaps just go above. Sometimes you are targeting this high, and this high is already 1.5, okay? So in most cases, you are targeting that high. Now, but you're a scalper, so here you go. This is a stop loss. How many points? 440 points. Okay, if you use 0.01, oh no, if 0.01 something or 0.001 or something, that's about $4. You know, this use nano lot size. Okay, so now you are in, the trade is going on. Okay, you know you are a scalper. This is 1 minute, guys. Now the market is going on. What is the 50 moving average helping you to do? Remember what I said is that the 50 moving average help you when the market pull back to it. You are looking for an entry. You've bought again. The market is moving and you are making more money. Of course, you are still setting your take profit in that order. Now you become more wary when the market close again and again below the 50 moving average. That's a concern. So you have to actually watch your trade. Okay. Until now, for me, what am I going to do? I will have to mark this high until I see market cross it. I may not take any trade again. Okay. This place has to be broken. It shows that all of this was just like major pullback, and then the market continue. Where am I targeting? But remember, we said the market is actually a downtrend. So all this one you have been trading can just be a mere pullback. All right? All this you're trading can just be a mere pullback. How will you know? This is a high somewhere, and then at the end of the day, if it's not still going well, because sometimes you get carried away. So what am I going to do when the market eventually crosses altogether, and then the 50 moving average is above, just like what you have here? Then I'm going to be looking for another entry to short the market. All you are doing is to buy and sell, not waiting for a particular direction. But as far as this one still hold, you are still making money, and then you are stacking more positions. All right, so that is the simple way for this. More detail to be explained. I have more information about, this concept and all that. So it's the same strategy applied or applicable into well trade. So let me know about flog issues. In fact, I traded this instrument today. This is VOL99. VOL99. See what I did? So that's no stress on that. That's why it's still in 1 minute. We look at it. I've checked. So, my 15 minutes. So I wouldn't go there. So you know what to do. Now, when I marked, I saw that. Okay, so let's go there. So let's now zoom so that you understand now. So here you go. Good. So look at this. This was fantastic. Now, when I was trading this, okay, so when I was trading this, the hair has not come, okay? So that means if you look at it, this is a low and this is a high, okay? So if that's the case, so what I do is to mark it out. Good, fantastic. Mark it out. Okay, so I mark it out. Never mind. I think they don't have stable stuff. Okay, so this is a high, this is a low, so this is the main low. Okay, so that means I have two major range. There's one here. Okay, there is one here. Are you seeing it now? And then I have another one here. So in case broken. Okay. So sometimes the market can be choppy, just one sideways and all of that. So have you seen what I've done now? So there's a low here. So this is a high, this is a low. So I've gotten a range. So let's go to back to the 1 minute. Oh, I think this guy had even exhausted its patience. Ah, okay. So I will have been in the trade again too. That's what it means. So here you go. Here you go, ladies and gentlemen. So what do we say you add? Number one, you add MACD, MACD, right? So number two, you add EMA, EMA. I think this is getting too long. So just to exemplify it here, and so it's the same thing, it's the same concept. So you applicable everywhere. 50 moving average. All right, good. So the MACD, change it to trading view. Sorry, not trading view. Change it to MT5 style. Here is changed to columns. So I love my color. So there we go. So we're good to go. Now, if you look at it now, so this is an exhaustion point. You get it? This is an exhaustion point. Now, why price action and liquidity concept here? So you can see your MACD had been down. Look at it, even when it crosses. Some people wait for the MACD to cross. So if you understand market properly, you can do your structure before even the MACD crosses. Okay, let's go here. So here you go. The only thing is that you have to be very careful with the instruments on well trade because sometimes they can disabuse or abuse structure. So now, so let's look at this. This is the the lowest. Okay, yeah. So this is the lowest. Now this is a low before this low. So let's do something. Just the same thing, right? So we have to take this to identify the low and the high that created the lowest. Yeah. So ordinarily, these highs will be taken out, right? Now, but there's something that just happened here. Another high was created here. So another high was created here. That means we have a new low here. So since we have a new low here, very simple, right? So that means here is a low, here is a high, and here is a higher low, higher than this, but lower than this. So if that is the case, of course, inside this box. So ordinarily, if this was taken out, we expect the market to return back to this point. And this is the point we want it to come back to. Look at it. Let's quickly look at it here. Or to come back to this imbalance, which align with the order block. Right? So, but right now you can see that you can't really decide. So now the market, this is market structure shift. So if you return back here and reject, you want to be buying, okay? And so this high will be your first target. So because ordinarily, if this was taken out, you'll be expecting that the markets will return back here. So, but now the market have returned to this point, but we need to have down close candle, or probably a very fantastic engulfing. But for me, I will let this structure to be broken and I will enter. So when you enter, this is what to do. Your entry, if it's here, your stop loss is going to be below this point. Your take profit 1:1 or 1:2 risk reward. Okay, so that should be here. So almost, okay, so almost at this point. If I take it up to that point, fine, that's good. Then the question you ask now, what will have happened? If the market has crossed here, you wait for a retest here and then continue to sell. Do you understand? Okay, so that is this first strategy. This formula is very simple. You have to obey it, wait patiently, let it, dance to your tune. Don't run after it, let them come to you, and then you are good to go. All right, so thank you very much. This is Felix Jimo, the team leader of Plan B Express. And so we show you how to be involved by yourself and make money. So with this, you're going to ask me the stop loss or the lot size as you use the minimum one, because how much are you trading with? And if you're trading on well trade, like 99 shouldn't be what you would trade with $10. Though I traded it with that $20, but that was quite risky. So you have to be very careful because you have to ascertain how much loss you're going to have. So if you look at this trade now, it's mature for taking. And so that means, because I've reacted here, that means entry will have been here and the stop loss over here. Okay. And then you see the market will start running. All right. So that is what it is of this strategy, this formula. So the next formula is what I'm going to be explaining in the next video. You will still there to watch it. You're going to maximize it to as simple as possible. Does that make sense? All right. So don't waste time. Go to the comment section. You see the link for Well Trade for Deriv. Register, fill your account, $10, $20, right? Then you can start trading. But at least, preferably, if you have up to $50, make a lot of sense. If you have to $50, you can chat with me. It can be added to our Signal group from Plan B Express. Thank you. So the trade is going to be running up now, and then when you are need, you'll be running and making profit. So, will I come your way again?